stop loss to reduce the risk from where you are entering to where price might go. Now, this is a 0.1% chance that this will happen, but you still have to have it. Bought at 300, you want to sell it off here. So if I buy at 300 naira, the price gets to 400 naira. Guys, is this passing an information to you? Huh? Good. It might not be passing information to you, but if I give this to a civil engineering student, will this make a lot of sense? Absolutely, because he understands the language, which is the code. What about this? Is this also a language? Is this passing an information? Good. So when you see this, what about this one? Is it a language? Absolutely. So if you look at this, what do you see? Is this not a language? So if you see this on your chart, what you are looking at is a language. And this is how the market speaks to us as financial analysts. So when I see this, I can know if I'm able to sell, or if I'm going to buy, or if I want to wait. And these are the things that we're going to be teaching you in the training. Yesterday, who can tell me? That thing I said, the news, what is it called? A fundamental event. How the price is going to move up. Let's assume the next day, which is tomorrow, you go to the market. When you get to the market, price of Gari is selling for a high price of, I'm giving an example, please. 500 naira per Congo. I'm just giving an example. Now, if you have 500 naira per Congo, some people will be selling their own for less. Let's assume this is 400. So we have a high price of 500 naira and a low price of how much? 400. So if you can price very well, if you are very, you are very good, you can buy it at the rate of 400. But 400 is the least you can buy. And this was happening between the hours of 9 o'clock to 11 o'clock in the morning. By 12 o'clock, the demand for Gari is now more. We have more demand. We have more buyers in the market. What do you think will happen to that price again? It will move up. In moving up, it's going to go to a next higher price. From 500, the price has gone to 800 naira. And at 800 naira, of course, some people will say, you know what? Let me also sell for something lesser. Maybe for 700. So take note of this. Price of 800 naira and 500. Which one is higher? Is it 800 or 500? 800. Good. So we call this price a higher high. This 800 is higher than the previous price of 500. And this low of 700 naira is higher than 400. So we also call it a higher low. So please take this down. Anytime price is going up in an upward movement, there is a formula that is being seen. Higher highs and higher lows. Price begins to move in a form of higher highs and higher lows. So where do I take my trade from? Where do I buy from? I will look for a low to enter my trade. Why? Because of two reasons. Number one, the low point is the cheapest point here. So if I enter here, I am going to be making more money than me entering anywhere here. Number two, my risk is also being reduced because I can put my stop loss somewhere around here and my take profit, can move on. So if I take a trade like this now, I can, make money from that. How can I know when this is happening? You can use what is called a moving average, either exponential or any other one you want to use. But moving average can give you this very, very, very fast. Number two is on a downward trend. But before we go there, let's quickly look at a classwork. So look at this. In this chart now, where should I buy? Is it at point A or at point B? Good. What about this other one? Where should I buy? Is it at point B or at point A? Point B. Very simple. So if I take a trade here, my stop loss is here. My take profits could be here, or I leave it open. From year to year, as a student, you have been able to make 2,000, 5,000 per week, per month, per day, depending on what you're doing. And you're able to at least some change. You can have some change. You don't need to call home every time. Now, let's take it to the next level. Now, for a sell scenario, the same thing happens. If price is going to be relaxing down or price is correcting down, like the other time they were asking an overbought level. When price is overbought, it means that the demand for it has made the price to be so expensive. And because it's so expensive, like I told you yesterday, it has gotten to a resistance. And once price at a resistance, the next thing that will happen is a correction. Because the level of demand will disappear. Supply would have to correct price down. When that is happening, it also has a pattern. So we have a high price of 800 naira, or of 1,000 naira, and a low price of 800. But now the lockdown is over. We have more people that are selling Gari in the market. Everybody can buy Gari. So there's no rush You know, you don't need to run and buy Gary because everybody can now go out. So nobody is really going to the market to buy anything. Don't forget, the demand has caused a lot of people to go and buy Gary because they believe they're going to make more money during that period. But all of a sudden, they have relaxed the lockdown. So what's going to happen? Price will begin to move down. Now, the next low price is going to be at 600 naira. If you compare 600 naira to 800, which one is lower? Is it 600 or 800? So we call this a lower low, not a higher low. This is a lower low. And this high probably is at 700 naira compared to 1,000 is very low. So we call this a lower high. So when price is going down, price has a formula of movement. Lower lows and what? Lower highs. So where do I sell from? I wait for price to get to a high for me to take my sell. So when price goes down, I can buy back at a cheaper rate. At this point, my stop loss is just above here so that I can minimize my risk very, very fast. Now, this looks very, very nice. Let's quickly do some very class work, some good class work. Look at this. Where is the price going here? Is it going up or going down? And so, like that. That is also point B. So now, this is nice. But eventually, how can I out it? Why can't I automate this entire thing? And that was what brought my interest in automation and in software development. But with ChatGPT today, anybody can below it's above the 50 EMA. What's 50? It's above the 50 EMA. What's 50 EMA? It means that when the price is going up, all right? So let me not use some economic terms because I know it's not everybody here that understand what I'm saying. So let me break it down to layman. So I want you to initiate a buy for me when price is going up. And I want you to initiate a sell from me when price is going down. Just the same way I've done. I'm not the one that wrote this code. I can write this code. But this was written in under 2 minutes. Yet, this is where I need to test if the code in about 5 months from my initial capital and had a very good risk management also. Because this is something that has been the upper week. I'm using it for anything. If that we have questions that we want to ask, can we have probably a mic? That's how to do it so that it doesn't clash with any of your lectures. Probably we're going to put it on a time that is going to be.
Of others, I would like to ask a question and ask TC and then ask a new question. All right, so on behalf of others, I want to say that concerning the classes, now Forex on trading is not something you learn just within a few minutes like that. So I want to know how long, aside from the physical classes that we're going to be taking, which is 2 days, how long, would there be online classes because you will be leaving? And then the other question is, what are the rules in these classes? Thanks so much.
Let me quickly answer that. Please, we understand that we understand everything. I've been doing this for about 10 years right now. This is almost 10 years now. So I understand your question perfectly well. Please take note of this. This business is something that we believe that next week is going to be a foundational class. We have 6 hours first day, 6 hours second day. So it's a full class. So by the time we have a software, not just a software, what makes a strategy without loss? So the software also has that same risk management in place. How to properly manage the risk and how to make sure that at the end of the day your now it's not real money, but it's for you to be able to practice on your own so that
my first question is S&P 500, is it also like Dow Jones?
Good. Forex means of the price movement. That is called contract for difference. So if the price goes down, AI is actually the biggest thing in every industry. But we are saying that while you are learning
ChatGPT to do my trade.
All this is using for many years right now. All right. Mr. Paul Martins joins me on stage. Let's just have a few people come out and then ask questions.
Mr. Paul Martins.
Collection of different stock from different companies.
Correct.
A round of applause. You don't graduate. All right, let's go.
All right, second question.
Don't raise your hand before the question is being asked.
To go short to sell.
Correct. Last question. Last question. Next question. If the market is going on an upward trend, it moves in a particular formula. What's the formula?
Why did you raise your hand if it...
Higher
Ayalo.
Correct, but you're looking at the book. But no point and sell from what point?
I.
Correct. Seventh question. What is, when you put a direct commodities, can you mention two instruments?
Thank you. Go and have your seat. Go and have your seat. Oil and gold.
US, Texas.
Correct.
One
This is
more.
the last question now.
Yes.
When you take a trade, you need to put two levels of risk management or two risk management orders. What are they called?
Stop loss and take profit.
Correct.
Ladies and gentlemen, a round of applause.
Link on the board here. So you can type out that link, register with that link, and next week you'll be using this link to join Global Trade Capital. Anyone of us can use this link. Please, I want to ensure us to use this link the same way it is on the board. Just type it out, go through the link, register, and probably at the booth there you can get my number or that of Mr. Precious. It's nice being here for the past 2 days. It's a wonderful reception here. And I want to say a very big thank you to the HOD, all the students far and wide, and also to the prof and every one of us that's been here with us. Remain blessed. Thank you.
Thank you so much. Please, can we jam our hands together for, please, a round of applause, ladies and gentlemen, for GTC. We're now going to still see me next week with them. We got a day. So right about now, moving on at the speed of light, please, we're going straight to the panel session. After that, we have one more keynote session and we're done for the hungry and you know, and you really want to show if you're hungry and you know. Panel, for the panelists. A round of applause, ladies and gentlemen.
In 2009, Olakunle Olalekan Williams, Energy Group. A man full of academic prowess, an impactful man, Professor O.R. Olayeni. Thank you.
Standing on an existing protocol of 6 years of commercial and strategic research, implementation and management, his high standard of performance have earned him for gas to power, gas-based in Bafemi Awolowo University, Ile-Ife, where he finished PK as one of our energy panelists. He will be joining us virtually. I'll be introducing the moderator for today, Omobolaji Adesoji Maxwell, trade consultant at Offshore Capital Abuja and technical analyst too at APGC under the Presidential Power Initiative. Currently pursuing further education at the Metropolitan School of Business and Management, Omobolaji serves as the Business Development Manager at Electric City Energy, where he's contributing to the growth of the renewable energy sector in Abuja. With a warm round of applause, let us welcome the moderator of this panel session, Omobolaji Adesoji. Thank you very much.
Thank you very much. Good afternoon. Good afternoon. Good afternoon. Good afternoon. Check, check. Okay. Seems it has been corrected. Okay. Thank you very much. Once again, welcome everyone to this sound check. Okay, this is better. Thank you very much, and I welcome everyone to this occasion. Damilive, it's so good to have you here also. Joshua is joining us virtually. Joshua, can you confirm? Can you hear us? Media, please, can you correct this? Sound check. Okay, thank you. I hope that will not occur again. So the discussion for today is finance and technology steering economic prosperity in the energy frontier. We all know that for us to reap the and you believe with me that for us to have a resounding economic system, energy is very important and vital. And this is a global discourse.
Sound check. Sound check. Sound check. Sound check.
Check. Sound check. Sound check. Sound check. Sound check. Sound check. I hope it's not going to. Okay, so let's proceed. So, for apologies for the break in transmission due to technical issues. So, right now we shall proceed. As I was saying the other time, that our discussion today centers on finance and technology steering economic prosperity in the energy frontier. So, my first question will be going to Professor Olayeni, who is a renewable energy expert and a professor of economics at Bafana University. My first question for you is this. We all know that your output is a function of your input. Okay, so that to say, if you are expecting a particular output, you must as well put some input. So, do you think the educational sector in Nigeria has it takes to provide us the human capital needed to drive the energy sector forward and to ensure economic growth and stability?
Uh, Thank you very much. Good to have you here also after many years. Um, of course, macroeconomic structure of any economy actually depends on key variables, among which we have capital, which is accumulable, we have labor, and we have other factors. Most importantly, maybe I can put in the third one, which is energy. Your question relates to the labor part of it. And labor can be disaggregated into physical raw power and human capital. Of course, Nigerian educational system is not doing badly when it comes to giving manpower to people. That's why we have everybody here. It is important, this has been stressed by somebody going back to 1986, Lucas Jr., when he was working on the determinant of endogenous growth model. He basically emphasized accumulation of human capital as key determinants of any economy so that they will know when to take decisions. And when they take decisions, they can sit back and watch this fruit of the most of my products are doing fantastically well in the economy. I can't begin to mention names, but there are popular names that you know. Even among the people who are sponsoring this program, one of my students in the past is Paul Alaje. And Paul Alaje, we discuss economics in a manner, is the funding. But within what we have, we are still training the best brains. In the same department here, we trained somebody who went to, I share exactly what Precious, the guy that left the podium now, talked about. Stand neck and neck with their mates anywhere in the world. Example, you. Thank you very much.
Workforce is not about breeding children. It's about, investing in them, giving them the right tools to make the right decision in life. That is a very big one. Thank you very much, sir. So moving on to Damilare. Damilare, I want to take...
Okay, I bring greetings from my CEO, who is unable to make it to this event due to last-minute change of schedule. But you can be rest assured that he has sent one of his best. And let me quickly tie into what Prof just said before I move to the question, right? I also happen to finish from OAU panel. All right, so let's quickly talk about gas pricing. And I'm going to try to speak into in two folds, right? So I will just assume we know what gas is used for. So there's domestic use of gas, and there's the IOCs, the Shell, the Mobil, the whatever you want to call them. We call them international oil companies. That's mean of IOC. I'm trying not to sound too engineering here, right? Then once you've gotten that gas from them, right, you need to get what we call in the industry premier tariff, right? Then once you are out of there, you then need to, depending on where you are going to. So let me paint a scenario. I'm using White House. I dealt with White House for so many times. Let's say another company also has a pipeline from here to White House. You then also pay them what we call tertiary tariff. And all of these prices are $9, $10 per 1,000 scoff. So ship gas from Nigeria to Europe or to Asian markets, any other market that is available. So those markets, just like the Precious were saying the other time, they are commodities. People trade gas just like every other commodity, the way people trade gold and the likes. Then parties from the gas you get in Nigeria to that you get in. We are talking of majorly LNG. LNG is just liquefied natural gas, and that is usually sold in metric ton.
For into renewable era, one of those tenets is the security of gas. That is the accessibility, and most importantly, the...
Let me quickly highlight that the gas you just mentioned is called LPG, liquefied petroleum. They had come to invest in Nigerians, and they will do, it's just simple mathematics. I will sell to countries, to economics where I know if I produce gas, let's say 3 naira here, I take it over there, I add transportation, maybe I can sell for 10 naira. I will sell there, get finance for gas projects. So what it means is that if you would recollect as well, you understand that but there's a study that shows that by 2050, Africa will be the most populous continent. Will be the second most populous continent, and by 2000, we would have overtaken the China and the Indias of this world. So what that means is that population has grown as well, demand has surged high, all right, and you have to sell in naira, and you have opportunity to collect loan in dollars, sell in dollars. I guess you already know the answer. So in summary, it's investment in renewable energy, R&D of renewable energy, and so that's affecting a whole lot, but I hope there's a way out somewhere. Yeah, there is actually.
Thank you very much. Prof, do you have anything to add to that?
Well, is and supply. Whether we are pricing gas, crude oil, even the forex can better make more profits. And looking at the cost profile of the investment, looking at the amount they have used to borrow. So in essence, I can see from here that what is actually driving the price is more or less the supply side, not the demand side. Beyond just maybe saying the investors are interested in making more profits, the seasonal variation can also contribute. In a colder environment, okay, people need more heat, right? And they want to generate more. The same thing applies to demand for oil or petrol, right? So what is going on here? I can see the factor here driving the price. I think if we could work on our, maybe by the time we work on our forex, which is more driven by macroeconomic variables, we can have better bargain in terms of people. Actually, when you look at the energy mix in Nigeria, you are going to talk about the hydrocarbon-driven components. You are going to talk about renewable components. We are not much into nuclear reactor